What is up, everybody? The election is finally over. If you've been following what we've been doing here at Premium Pirates, I was trying to hold a little bit of cash back to just kind of sit on the sidelines through the uncertainty of the election. But it is a pirate's life for me. It is over. It is time to get back to plundering some premium. So I wanted to do a new live trading video for you today. So before I dive into anything else, I always check the CNN Fear and Greed Index. This is just what I use as my barometer to figure out how aggressive do I want to be with deploying all of the capital I have in my portfolio. I try to follow Warren Buffett's advice here. I'm not trying to time the market. I'm just using this as a measure of aggressiveness. And his advice always, be fearful when others are greedy, be greedy when others are fearful. So when we get into the greed end of the spectrum, I try to set aside a little bit of capital to deploy in case the pullback's coming. Well, obviously, the market went up yesterday after the election. Whether or not a pullback is coming, I have no idea. I'm not trying to time the market. I just want to be prepared for any eventuality of what may happen. I realized in the last video that I mentioned that my broker will pay interest on uninvested cash. But if your broker doesn't do that, or if you're using a different account type, another thing that I do occasionally is I will just open up some T-bills, some positions on T-bills. This is what, through an ETF bill. This one works really well. It's 1 to 3 month T-bill ETF. And you can see, I move cash into here. I move uninvested cash here when I'm kind of sitting on the sidelines. You can see my average risk over time. I mean, obviously leading up here to the election, was a little uncertain. And, the market had moved more into the extreme greed end of the sentiment overall. And so I was like, all right, set aside some cash, set aside some cash. And then I started pulling a little bit of that risk out. You can see, I mean, I've got 1% raw return here, 5% annualized. And I use this to move in and out of. You can do something similar. You can just keep it in cash. I mean, realistically, 1% return is not going to change your fortunes, I think, if you're trading the wheel strategy. But for me, I hate cash sitting idle. So this is what I do with it. So the first thing I did is hop over here to the Premium Pirates Wheel Strategy screener. I wanted to throw in some expirations. I don't really want to open any positions that expire tomorrow, so I'm just going to throw, the next major, probably through the end of the year, the major expiration dates. I'm looking at popular wheel stocks as the watch list that I like. I always want stocks trading at a discount to fair value. I'm going to look at 1 star and above. I like the raw return of 2% plus. I open up wheel campaigns through cash secured puts only. And I've mentioned a lot of videos in the past. I really don't like to put 5% of my portfolio into any single position, any single stock. There's some flexibility, I think, with, maybe you can go up to 10%, maybe up to 15%. That's really up to you. It's up to your style. But if you look back at some of the documentation that we provide of how, we trade the wheel strategy, we talk about deploying capital in stages up to 15% in thirds. And if you're willing to go beyond 5%, it may give you an opportunity sometimes to lower your cost basis on things that move against you. But for now, I'm going to look at opening up positions that are going to be max 10% of my portfolio value. Just, again, want to be conservative. Risk management, diversification, these things are really important. We're not trying to hit home runs. We're trying to live to fight another day. You're looking for consistent 1, 2, 3% returns each month. That really adds up. It compounds over a year. And since we're not in extreme greed, I'm going to go with delta of 0.4 instead of 0.3. Always looking at large and mega cap only. And one thing I'm doing different this time is I am not setting a no earnings filter. And I'll explain why in a second, but I'm going to go ahead and hammer the scan button. And it's just lots of fresh premium, just waiting to be plundered. So I didn't set that no earnings filter this time. And I've got pretty insane annualized and raw returns here. 5.7% raw return, over 1,100% annualized return on this Pinterest position. Amazing. But it has earnings, and I didn't filter that. So what I'm looking at right now, there are some positions that I've found recently that aren't as volatile, even though there's earnings. Because when I set that earnings filter, what I'm really trying to do is I'm trying to cut out the high end of the volatility, right? But if the implied volatility, even with the earnings announcement, kind of meets the criteria I'm looking at for a good wheel stock, I don't automatically want to exclude it. So what the metric that I like to look at is IV percentile. So this is saying that 94% of the days over the past calendar year, Pinterest has had a lower implied volatility than it does right now, which is at 119%, just crazy, right? That's too volatile for the whale strategy. We don't want that, right? So I'm just gonna, kind of scroll down. I'm looking for, remember, this is always sorted by annualized return. So let's look for one that kind of meets the criteria of what we're looking for here. And a lot of these, you could cut out a lot of these by throwing on that earnings filter, but for now I don't. So first thing that comes down here is the 52%. 50% IV and below IV percentile is what I like. So Albertsons is here. It's trading at a 28% discount to fair value if I open this strike, 2.4% raw return, 190% annualized return. This is really what we're looking for. I think that, the implied volatility itself might be a little on the high end of 79%, but relative to what this stock does over the last year, this is mid-range. Like, this is mid-level. It's an attractive return. Like, I'm looking for 2% and above only. Well, I'm going to go ahead and open a campaign with a cash secured put on ACI on Albertsons. But I already do have a position open in this account. You can see I have 100 shares that I've purchased. My average cost was $22.71. You can see I'm underwater on it a little bit, down 16%. But if I go in here and I look at this same position, the same campaign in my in my wheel strategy tracker, you can see right here, I've already gained 232.66 in premium. I've got a 10% return. This is not including the unrealized loss, which at this point is, like I said, 361. So I'm a little bit underwater if you look at my adjusted cost basis, but I'm willing to, this is where I was talking about deploying capital in thirds. So this is an opportunity for me to not only earn a really nice premium, but also lower my cost basis on this in the event that I do get assigned on my cash secured put. So we're going to look at this. This is November 15th, $18 put. Sell a put for November 15th, $18. And we are done. Oh, did I finish the submit? There you go. I just earned almost $35 in premium on that one. Really good start. Let's go back to the option scanner. I have more cash I want to get in the market right now. I'm ready to open some more risk. I'm looking at this IV percentile column, lots of 74s, 94s. Not that interested in those. Warner Brothers Discovery. This is one that has been coming up over and over and over again recently. If you look at the life cycle of the campaign of what I've been doing with Warner Brothers Discovery, I mean, I've been moving in one of my other accounts. I've been moving a lot of money, a lot of positions in and out. You can see my average risk is going up, it's going back down. So this is one that I've just been hammering lately. I've been all over Warner Brothers Discovery for the reason Morningstar fair value is $17. This one's trading at a 47% discount to fair value at a $9 strike price. I believe I'm getting the stock at a really nice discount if I get assigned. And, it's not very expensive. It's a $9 put. So I can continue to open up new cash secured puts on it as they expire, or I can layer them on top as long as I'm managing my risk if I'm not getting too heavily invested in one position. So I'm going to go ahead and open up this cash secured put as well. So we go over to Warner Brothers Discovery. Oh, what was I looking for? Put on the 22nd at $9. And just earned another $22 in premium. All right, back over to the option scanner. A little more cash I want to put on right now. I'm looking at mostly this IV percentile. 85, 94. Here's another Warner Brothers Discovery position. And I had another one come up earlier. I think I might just be at the end of what the screener can pull up here. So I'm just going to hide a couple different symbols just for the purposes of this scan. I don't want to hide them permanently because these are actually positions that you like, but I'm going to hide Pinterest and DraftKings. All right, so I hid those two symbols and I went ahead and took off the annualized return. I'm just looking at raw return 2%. And, again, scanning down the list, I've already opened this position, this Albertsons. I've already opened this Warner Brothers Discovery. A couple other options here, APA, but the IV percentile at 85%, not interested. looking down this list. This Halliburton one, this is potential. You're going to have to, I guess earnings actually today, but the IV percentile is still at 69%, 70%. That's one I might worry about. This MGM position, this is one that I might be curious about. So let's go investigate this guy. All right. So this was a cash secured put on the 29th at 2.1% raw return. It's trading at a 27% discount to fair value. For $37 a strike. We hit it. Another $74 in premium. So those are three new campaigns that I just opened right now. I'll go ahead and import them into my wheel strategy tracker, and we can, keep tabs on how they perform over the next couple weeks. Hopefully they're not open long, and you get a really good return, free up the money, and move on to something else. In our last video, I touched on a couple different things, and I just wanted to give an update on how those campaigns went as well. The first one is actually closed now, and it was on SQ. So if I go into my campaign explorer, you can see I've been doing this for a while. I've got a lot of campaign history in here. But this is one that actually I found the cash secured put on a video that we did, a live trading video. The next video, I had actually been assigned on that cash secured put. I wrote a covered call, and between then, that covered call at 69, which was my cost basis, actually expired, and I opened another one at $1 below. Normally, I like to write my cover calls right at whatever my basis is, but the premium on this one was just too juicy. And I was ready to free up some capital, obviously set some aside and move on to other things. So when I ended up getting those shares called away, they got called away at $68, which was a full dollar below my basis. But I only lost $100 on that. So if you look at the life of this campaign, I captured the premium when I sold the CSP. I got assigned. I wrote a covered call, more premium, right? And it was really nice. And then when I took that loss, and I used loss in air quotes of about $100, when I sold below my basis, it lowered my net premium on this campaign to just shy of $305. Okay, I still got a 4% raw return on this campaign, a 44% annualized return. I mean, I don't know about you, but I take that all day. It was open for a little over a month. Again, 4% a month. You do that consistently, you compound the interest over a year, you're going to be successful. All right. And the next one is, I think I've shown you guys already on the last video. I opened another position on Warner Brothers Discovery, but I mean, I'm just all over this right now. The premiums have been good. It's a lower cost stock. The Morningstar fair value hasn't changed. There's just a lot of activity on this, and I think this really highlights, what the value of this, our wheel tracker is. This would be just a complete nightmare to try to keep track of on a spreadsheet. And trust me, I've been there. I have the spreadsheets with, all the formulas and all the tabs and all the insanity that you make one error and it's just an absolute nightmare. Like for me right now, I can just say, man, I got a 5% return on this campaign. I'm really happy, and it's still going. You can see that even though I got a sign, obviously my risk went up, and I started turning around and wrote a covered call at my basis. Those shares get called away. You saw me here. I just opened another CSP on this. Like this is one I've just been all over lately. And then because we want to show you warts and all, I think that one of the criticisms that I see of the wheel strategy when I watch other YouTube videos is they're like, hey, like they're not going to show you their unrealized losses. They're just showing you all this premium that they've gained, and they don't show you, how far underwater they are in some of these positions. That's not necessarily a criticism of us. It is as much as it is just people talking about the wheel strategy and sharing information about the wheel strategy. But we want to show you like what it's really like. Like these live trading videos, I think are most beneficial if you're able to see the reality of what happens on some of these campaigns. So if you look at, my net premium over time, you're going to notice like I'm actually negative this month. Why? That's, super important information. And so back in, it was in March. Okay. I opened up a cash secured put on Intel. Everything aligned with the way that told me at that time, hey, you follow your process. This is a good position for you to take. I opened up that campaign. Obviously I was making some premium on it. And I got assigned my my cost basis was $44 per share. After that assignment, Morningstar updated the fair value to $21 a share. So I had to make a decision. I have this stock that I am way underwater on. It's going to take me a lot of time to get out of this position if I want to hold this till it climbs all the way back from where it is, which was below $21 at that point, all the way back to $44. I never liked the idea of turning an unrealized loss into a realized loss. I'm not a big fan of that, but I had to make a decision. What's the opportunity cost of just holding on to this position, this campaign indefinitely? Because we don't know when Intel is going to go back up, and I also don't like the idea of holding on to a stock that I paid more for than it is currently worth. So what I did is I started selling covered calls much lower to the fair value, $23, $23.50. This is well below my basis until it finally got all the way down to about 22, which again was above what Morningstar said the fair value was, and my shares got called away. So I took a big loss on what I paid for these shares versus what I eventually sold them at. And was capturing premium all along the way, right? It's not a straight loss because you can see all these, incremental gains here, this premium that was realized throughout the life cycle until I was able to free up that capital. So in our wheel tracker, what you look is losses are reported and gains are reported when they're realized. So even though this was a position that was opened, a campaign that was opened back in March, I did not realize that loss until this month. So that puts me underwater for this month. Now, you just saw me put that capital to use, some of that capital to use on positions that are returning, 2%, 2.5%, much juicier premiums. And so I'm not always going to take a loss. It is rare. I can say that if I look back through this entire year, that's the only campaign that I had open that the fair value ended up getting adjusted below my basis. And I made that decision. That may not work for you. Others are probably going to advise you totally different, right? Don't ever take a loss. But that's the way I do it. And again, the wheel strategy is about making it work for you. You're trying to come up with something predictable, repeatable, account for the fact that you're going to be wrong occasionally, diversify, manage your risk, and look for consistent premiums over time. Yes, I took a loss on them. My net premium for the year is significantly higher than that, obviously. And that loss is included in this net premium for the year. So you can see my cumulative net premium obviously took a bit of a nosedive here. I'm still at 26,000 in net premium. It's, I'm really overall, I'm making good progress with the whale strategy. I'm making informed decisions about how long I'm going to keep a position open, when to close a campaign, when to cut my losses, and these tools, they just help you out tremendously. So again, if you haven't already, you got to head over to Premium Pirates, take a 14-day trial. You're going to use the wheel screener, the tracking tools, use them as much as you like, do whatever you want. Subscribe to this channel on YouTube. This is where we post all of our good content. And if you like it, it really helps us get the word out. If you like what we're doing, if you have any questions or, you want to tell me I'm an idiot or whatever it is, please put a comment down below. We'd love to hear from you. And until next time, get out there, do some market rating and some premium plundering. Thanks, everybody.